find that due to the state of emergency declared by the governor as a result of COVID-19 pandemic, and in accordance with House Rule 67 and the governor's emergency order number 12, pursuant to Executive Order 2020-04, this public body is authorized to meet electronically. This is a work session on revenues. Please note that there is no physical location for members of the public to observe and listen contemporaneously to this meeting. However, in accordance with the emergency order, I am confirming that all members of the committee and select legislative staff have the ability to communicate contemporaneously during this meeting through the Zoom electronic meeting platform, and the public has access to contemporaneously listen and, if necessary, participate in this meeting by the Zoom platform or by telephone. All necessary access information has been made available in the House calendar and through the electronic calendar on the General Court website. The notice for this meeting complies with House Rules RSA 91A. Anyone who has a problem accessing the meeting should call 271-3600 or email hcs@leg.state.nh.us. In the event the public is unable to access the meeting will be adjourned and rescheduled. I want to introduce the staff that are on the meeting. Assisting us, Jennifer Floor, committee researcher. Please note that all votes that are taken during this meeting should be done by roll call vote. Let's start the meeting by taking a roll call of attendance. When each member states their presence, please also state whether there is anyone in the room with you during this meeting, which is required under the right to know law. So Representative Bernstein, would you take the roll?
Thank you, Mr. Chair, and good morning to you. Today is May the 12th, 2021. It is 10:02 a.m. We'll begin roll call with Representative Patrick O'Brami.
Here in my home in Stratham, my wife's in the house Zooming on as a member of the Aging Commission that she's on. Thank you.
Good. Representative Mary Griffin. Representative Jordan O'Leary.
Home in Hudson. My wife is in the house someplace, and I'm just sitting here trying to figure out how come I didn't get any check from Elwood.
We were all wondering that, actually. Representative Ober.
Good morning. Home in Hudson with the usual group of 6.
Very good. Representative Doucette. Your clerk is Alan Burstein. I'm in my home office in Nottingham, New Hampshire by myself. Representative Robert Elliott.
I'm here in my daughter's home in Salem, New Hampshire. She's a pharmacist. She works a 12-hour shift for the next 5 days, and it's a horror show. Thank you very much.
Good morning. Representative Janigian. Representative Nunes.
Good morning, Mr. Clerk. It's a beautiful day in Pelham, New Hampshire, where I'm home alone.
Glad to hear that. Good morning to you, sir. Representative Tim Baxter. It looks like Tim's screen is frozen right now. We'll come back to Representative Baxter. Representative Spilsbury.
Good morning. I'm home in Charlestown with my wife elsewhere in the home.
Representative Tudor.
Hey, Mr. Clerk.
Yes, sir.
Mr. Clerk. Sorry, I think my connection was cutting out there, but I'm here in my car. I apologize about the connection.
No problem. Good morning to you, Representative Baxter. Representative Tudor.
Here in Northwood, wife and grandkids upstairs, and back in the basement.
Representative Susan Almy.
Home alone in Lebanon. Thank you.
Representative Ames.
I'm here alone in my home office in Jaffrey.
Representative Southworth.
Here alone in Dover.
Representative Malloy.
Alone in Greenland.
Representative Thomas C. Schamberg.
Representative Schamberg is here in Wilmot, and this is the best part of the day, listening to your tenor voice call out our names. Thank you.
You're too kind, Representative. Representative Tucker.
I'm here alone in Randolph, where it snowed at about 2,500 feet and above. So the mountains are quite beautiful.
Very good. Representative Gomarlo.
I'm here in Swansea alone.
Representative Loftman. Representative Gorg.
Good morning. I am present and alone.
Good morning. Representative Hacken Phillips.
Good morning. I am alone from my home in Hanover with the 2 dogs today.
Representative James Murphy.
Good morning. I am home alone in Hanover.
Our chairman, Representative Norman Major.
Good morning. I'm home in my office in Plasto, and my wife is in the house.
Good morning, sir. Mr. Chair, there are 20 members present. 4 are unable to be here right now.
Thank you, Representative Bernstein. This morning, we're going to deal with revenues, and primarily the revenues associated. We're going to be discussing Senate Bill 3. Janine, would you let any members of the DRA in?
Yes, I will. So that would be Melissa Rollins and Devin Roderick. Unless there's someone else I don't know. Oh, I see a DRA hand there. Okay, one more.
Melissa, who do you have with you?
Good morning, Representative Major. We have Carolyn Lear, Assistant Commissioner of Department of Revenue, as well as Devin Roderick, Financial Analyst of the Department of Revenue, and myself, Melissa Rollins, Senior Financial Analyst for Department of Revenue.
Yesterday, Representative Bromley and myself talked with the DRA relative to the revenues associated with Senate Bill 3. And we wanted to get a better idea of the revenues associated with PPP funds and the revenues associated with the other stimulus packages in order to be able to determine which are potential candidates for refunding in the future if we pass Senate Bill 3, and also which are the ones associated with the additional stimulus packages, so that the bulk of that might be considered as one-time revenue. So Melissa or Carolyn, would you be able to get us started on this?
See, I'm muted. I'm sorry. I can kick us off. I think I'll start with your question about the impact of PPP first. And to begin, I just want to sort of step back for a minute and talk about what we are seeing and what we expect to see for tax revenue under current law as it relates to forgiven PPP loans. So as you'll recall, when Commissioner Stepp initially testified on this bill, under current law, forgiven PPP loans are included in revenue as taxable income. But to the extent that PPP loan is used to pay for business expenses, it also is a deduction. So for the most part, what we expect to see under current law is no real impact on revenue from forgiven PPP loans, because it's our belief, and I think you've heard testimony to confirm that, that based on the economic conditions as well as the terms of the PPP program, most PPP money was spent on normal business expenses. So they'll include the revenue and income, but then they'll deduct it all out again to account for those expenses. And that's really reflected in what we see in on returns to date. So we queried returns received to date, and taxpayers have reported about 5.4 million in PPP revenue. And what they're reporting to us is that portion of forgiven PPP loan that they did not spend on deductible expenses. So that number is very small, and that's what we would expect to see, because our expectation is that businesses used that money for business expenses. However, because we have such a large number of extensions this year, we are also missing a lot of data. So we think that that 5.4 million relates to about 8% of the total number of forms that we expected to receive for calendar year 2020 tax filers. Those returns won't come in until the fall. So there is sort of a lack of data for us to affirmatively say that the revenue we've received to date attributable to PPP is small. The fiscal impact of Senate Bill 3 is less about losing revenue we expected to receive and is more about allowing expenses when you're not requiring the taxpayer to also recognize the income that was used to pay those expenses. So the fiscal impact of SB3 is really the fact that you, under Senate Bill 3, you would not include the forgiven PPP loan in income, but you would still allow that expense. And then that expense, because it's not offsetting the PPP forgiven loan, is going to offset otherwise taxable income of that taxpayer. You have the fiscal impact of that that policy decision. All in, it's about $100 million, and we're working now to do our best to come up with a meaningful methodology for trying to spread that out across fiscal years, so that if you do proceed with Senate Bill 3, you'll have a better sense of how to account for it. Probably there, it makes sense for me to pause and answer any questions.
Questions from the members. Representative Bromley. Representative Bromley, are you muted?
Thank you, Mr. Chair. Is there a issue with the timing of when they take the deduction for expense and the versus taking for the forgiven revenue is not taxable? Is that an issue? I mean, can they take the deduction for the expense before and a tax year before the loan is forgiven? When the loan is forgiven, then they can take the reduce the revenue by the amount of the forgiven revenue. Follow what I'm saying? So
yes, I do understand, and I think our expectation is that taxpayers reported those expenses, which under current law are deductible, in the calendar year that they were incurred. So they should have, for calendar year filers, should have been reported in calendar year 2020. They would have included the expenses, but presumably not included the revenue until actually forgiven. What we know is that, and I think what you heard from the CPAs is, I think taxpayers have been taking different positions on this issue. There was some IRS guidance that indicated that taxpayers should treat a PPP loan as forgiven if they reasonably expected that loan to be forgiven, even if it hadn't yet been forgiven yet. And so in some instances, I believe taxpayers did follow that treatment for New Hampshire purposes and did report both the expenses and the income on their 2020 return when they filed it. But as you heard from the CPAs, at least some of them have advised their clients to not count the forgiven PPP loan until actually forgiven. And in that instance, there would be a disconnect between the expenses and the revenue.
Carolyn, the taxpayers if they had an expectation that they would be forgiven, would report in their federal taxes that it is forgiven, but they never had any instructions relative to the state tax. Is that correct?
That's correct. And I think that's why there's probably a disconnect with what we thought we were going to see, because generally our expectation is that on timing issues like that, taxpayers follow the feds. But I think you're absolutely right. There was no directive from us to follow that federal guidance.
And from what I hear from accountants, they recommended to file using current law rather than assuming, such as the Fed said, that you could assume you're going to get it.
Yep.
Okay.
And so unfortunately, that disconnect and that different treatment among taxpayers and CPAs unfortunately makes the situation more uncertain as it relates to that timing question.
Cause more confusion. Representative Ames. Yep.
Thank you. Had to get to my mute button. So this is really hard to get a handle on. The situation where a taxpayer in fiscal year 20 has taken a deduction for the expenses that related to the PPP loan, and subsequently in a subsequent tax year receives forgiveness on the loan. What I'm wondering about is this: what will that and all the other taxpayers like that do? Will they be seeking a refund? How does this go? The deduction that they took will still be allowed.
So
you take me through this.
So if a taxpayer both under current law took the deduction and paid the tax in calendar year 2020, that would result in a refund if Senate Bill 3 was passed. If a taxpayer took the deduction in 2020 but wouldn't claim the income until the loan is actually forgiven in a later year, that will result in a decrease in expected revenue.
Okay, well, I'll leave it there for now.
Further questions at this point? Representative Bromley.
Yeah, I guess because current law and SB3 both, the expense can be deducted in both cases.
Yeah,
that's the issue. It's the revenue part, the forgiveness part of the revenue. So that's where I see the timing issue, that one can happen without the other. And I guess there's no clear answer on it other than understand that that's the case. And the degree to which that happens, it depends on how people are filing, I guess. Is that correct, Carolyn?
That's exactly right, Representative.
Okay, thank you.
In that case, they could file an amended return or declare less taxes owed in their FY 2021 tax, I would assume.
If SB3 is passed, you will have both refunds and just taxpayers paying less, depending on what they did in their 2020 year.
Representative Spilsbury.
Thank you, Mr. Chairman. As I understand the position being taken by accountants and clients advocating SB3, it tends to center, I think, on the situation where they have reported expenses in 2020. They already feel like whether they've reported or not, they've made their estimated payments and they've done their accounting for the 2020 liability, if there was any. And now they're concerned that the forgiveness will occur in 21. And that if we don't pass SB3, it's going to create a cash flow difficulty because they've said repeatedly, didn't set cash aside. They spent all of the money that came from PPP on expenses. Now, I'm having a hard time really taking the argument very seriously. I see this the timing issue, but are there provisions in our current business profits tax, which I don't know intimately, that allow them to carry forward excess losses from one year to the next year, so that any income that is not recognized until forgiven in 21 can be offset with losses that were not fully absorbed in 20? Or if that is not currently possible, could we further tweak our amendment by allowing, on the basis of the pandemic having lasted for more than a year and having carried over 2 different tax years, a one-time provision that just says any expenses or losses incurred in 20 can be offset against income generated in 21. Simple loss carry forward.
That's exactly right, Representative. So Melissa can jump in if I'm getting it wrong, but I believe New Hampshire allows the carry forward of prior year losses for 10 years. So that would certainly capture an instance where the taxpayer deducted expenses in 2020 to the extent that resulted in a loss.
Well, thank you for clarifying that. That means we don't even need to further change the bill or the amendment. And I've gone back and very carefully reread each letter that I've received from a business taxpayer and accountant. And I read closely. I don't think their argument is sound at all. And when I carefully parse what's being said in the Mason and Rich letter and the various other letters we've received, they just don't hold water. And if the idea is that it's an anomaly of timing, I think that the tax loss carry forward completely resolves that.
Any comment on that, Carolyn? If not,
no.
Representative Murphy.
Thank you, Mr. Chairman. Just a point of clarification, Carolyn. Is it right that most of the businesses declared the expense deduction in 20, but they had the option of filing the PPP dollars as income either in 20 or in 21? They could do it either year. Is that correct?
We would have accepted it. We would have accepted the taxpayer's decision to report PPP loans in both 20 or 21, based on that IRS guidance telling them to treat the loan as forgiven, even if not yet technically forgiven. So yes, the answer to your question is yes.
Follow up.
I was just wondering also, do you know, and I've heard from some businesses up here that they received the PPP dollars as a loan and then maybe forgiven, but they felt that there were changes made by Congress and the feds and they decided to return the dollars. Basically, do you know the magnitude of businesses that have returned the dollars?
I do not know that, Representative.
Okay.
Good question. Further questions before the DRA continues? I don't see anything, so either Melissa or Carolyn.
So I think the other question that you were hoping that we would address a bit is this concept of the 175 million that we're currently over plan and how much of that is attributable just more generally to all of the various stimulus programs. Are you ready for me to move on to that?
Yes, that would be very helpful to be able to differentiate. You can't come up with exact numbers, but that $175 million that's there could be, to me, is made up of two things. Is the PPP loans that once they're forgiven, we're going to have to be sent back as refunds, and the other is the other stimulus things that stimulated the economy, generated profits of a one-time nature, because once the pandemic is over, it's not going to be there again. So of that 175, what percentage of that would be considered one-time money?
Norm, can I just interject, Norm, before? Can I just interject first for a second?
Go ahead.
When we say the 175, it's really the 175 minus the 18, correct?
Yes.
So it's more like 157 we're talking about, correct?
Right. And that could grow. And the idea here is the process, and there's also of the 175. Not only is it the 18 point something million, but the normal growth that you would anticipate that would need to be taken out of, and what remains is associated with PPP loans and the other stimulus packages that would be considered one time. Carolyn?
Sure. So those of you who listened to us talk about revenues and estimating revenues have definitely heard us talk before about the concept of removing anomalies from the tax base before trying to predict, subsequent year revenues. And I think the real struggle with fiscal year 2021 is going to be that you have many anomalies and two really big anomalies. You have the anomaly of the pandemic itself, right? The pandemic certainly reduced revenues in an anomalous fashion during fiscal year 2021. And at the same time, you have the stimulus and its impacts on revenues, which anomalously impacts revenues in the opposite direction. The stimulus was really meant to offset the anomalous impact of COVID on the economy. And so the challenge becomes, how would you adjust the fiscal year 21 base to account for both that negative anomaly and the positive anomaly? Or do you just assume that they sort of cancel each other out and use fiscal year 21 as your base? From a data-driven standpoint, the department doesn't have a lot of data to sort of really suss out the competing effects of those two anomalies on fiscal year 21 revenue. Certainly all of the stimulus money that has flowed into the economy in the form of, grants to businesses and enhanced unemployment benefits and, the direct to individual stimulus payments from the IRS, all of those things flowing into the economy have certainly caused business taxes to be higher than they would have been if those stimulus programs hadn't existed. But by how much, we've thought on that question, and I'm not really sure we have data to give you a figure of how much of that 175 million can really be attributable to, the massive amount of stimulus money that's flowed into the economy. I think that's also compounded, our lack of information is also compounded by the fact that most of our taxpayers, and certainly most of our largest taxpayers, elect to file on extension. So at this point in the year, we have presumably all their money, but no information about what that money means. We won't have the information about what that money means until they actually file their returns in October and November of this year. So that certainly exacerbates your challenge and our challenge in trying to figure out, any helpful information about that $175 million that we are above, or to Representative Abrami's point, really 155 million that we're above plan this year. And then just to finish, I'd add to that, there are a lot of tax law changes that are taking place this year as well. I mean, I think a good example is that IRC conformity last year was really the first year that we were all in on Internal Revenue Code conformity to the Tax Cuts and Jobs Act. And we estimated the amount of revenue we thought conformity would generate. We could have been wrong, we could have been low. And so some of that revenue could be attributable to Internal Revenue Code conformity. Again, we won't know until we get all the returns in. And then this is the first year of market-based sourcing this year, which is a huge unknown as it relates to revenue. So certainly estimate payments that we've received to date this year could be impacted by market-based sourcing being new. With that, I think I'll pause, give Melissa the opportunity to jump in if she has anything to add, or otherwise we can field some questions.
No, Carolyn, I think you did a great job covering that.
Questions at this point, Representative Romney, followed by Representative Elmy.
Can you give us a sense of how you brought up market-based sourcing, and this is the first year of how we're doing finding those companies that are service companies providing service to New Hampshire that we can tax. That was the big issue when we talked about market-based sourcing. How long would it take for us to identify businesses that don't volunteer to pay the tax to New Hampshire versus the other way around?
Great question. So at this point, market-based sourcing took effect on 1/1/2021. So the only thing we would have expected to receive to date is one quarterly estimate payment from calendar year filers. I'm sorry. And so at this point, you're really in a voluntary compliance position. We won't start our investigatory work and our audit work really until we don't receive returns next spring and fall. That's really the timing of our compliance activity. What we've received to date will just be those taxpayers that have voluntarily complied.
Okay, thank you.
Representative Almy.
Thank you, Mr. Chairman. I've got two areas here of question. One of them is that we heard from Brian Gottlob that and the employment security analyses that there was more wage total wages in this state during COVID than at least as we went along in COVID, than there had been before, even though there were considerably less people employed, because the low wage people were thrown out of the labor force. They were mostly on doing personal service and couldn't do it. They were shut down. And the high income people continued to work and to get raises. And I'm wondering, I don't think that ends up meaning that there was more BET than we would normally expect. That it would just be a small amount of increase on the BET side, and that most of this 157 or whatever it was million is profit rather than wages, than things that we tax in BET. Have you thought about that?
Melissa, do you have any thoughts on that?
I was trying to see if I had the split between BET and PPT for this month, but I do think there's a couple of things there. Representative Almy, I think you're right. We have heard that. I was trying to go through Brian Gottlob's presentation while you were speaking real quick, because I do think New Hampshire, I think there's a couple of things that we've heard from economists, that high wage earners have earned more income than they have. Like you stated, however, low income earners have had severely reduced incomes from employers than they had. How much those offset each other, I'm not entirely sure. If it is the higher earner incomes, then we would have more of a BET increase, depending on which businesses you're talking about as well. So if they're smaller businesses, we may not see it as much in BET compared to larger businesses that are in the state. But we can definitely drill into that a little bit more. And as Carolyn said, the thing that we're struggling with right now is that we have a record number of extensions filed compared historically. So what we have for data is so minimal compared to what we have had in the past. So we can take a sample of compensation on the BET return and see if we've seen an increase in that for the returns that have been filed. However, I'm not sure of how much of a picture that will represent the whole once we get all the returns in October, in November.
I asked to wait my secondary until after other people have talked.
One of the things is you need a heck of a lot of wages increase in order to compete against what you were getting in the business profits tax. Because $1 million, every $1 million extra wages just generates $6,000 of BET. So if you had $100 million of wages, we're talking about $600,000. It's very hard to really equate one against the other. But go ahead. You want to hold your next question. So then Representative Ames.
Thank you. I think that you, DRA, were looking into the composition of the money that's come in terms of types of taxpayers and size. I'm wondering if you have made any progress with that.
Melissa, would you like to speak to what you have thus far? I can see you looking for it.
Sorry, I was pulling it up as we spoke. So yes, Representative Ames, we did have your email. It took a little bit longer to dig in, only because when reporting extension payments, we don't necessarily break down combined filers versus corporations. So I think you had asked us to look at extension payments that had come in based on the top 2 tiers of the triangle. So for those that are not completely familiar with our triangles, the top 2 tiers equal taxpayers with $100,000 or greater of tax liability. So we were looking at, of the extension payments, how much of those came in for the top 2 tiered amounts in the triangles, as well as how much of the extensions were made up for combined filers or water's edge filers. So for extension payments for March and April, we got about 197.4 million in revenue in those 2 voucher form payments. About 49%, just under 50% of those were from combined filers, and that's based on their 2019 filing. So 97.2 million out of the 197.4 million were combined filers, which are typically our larger corporations and our larger filers. And then comparing that extension data to those top 2 tiers of the triangles, again, the 100,000 or more in BPT, I should specify, that was about 40% or 78.3% of the extension payments coming in were paid by taxpayers in that either the bottom half or the lower 2 tiers of the triangle.
Can you send us those statistics?
Sure, I think we have an email that will go out today on that.
Thank you.
Thank you. Appreciate that. Is there anything that you would say that you've learned from this that maybe tells a story about changes in revenues?
That's a good question. I wish more people filed on returns and extensions, just to throw that out there. We like data here, so we like to dig in and find it. And it's really because this is, I know we say a word again, unprecedented times, and modeling out revenues is definitely challenging in this environment. And looking at an extension, for those of you who have not filed an extension, it's literally a piece of paper with a number on it with no information. And they're so much higher than they ever have been. So I don't think we have necessarily gleaned anything off of them that we would like to see typically in March and April, which is unfortunate because we also would like to know where this money is coming from and how the breakdown is, and have less assumptions than we're having to make. But again, it's hard when you've never been through this before, and trying to figure out what the future brings.
If I may, just one other question.
Go ahead.
Just with respect to, say, the combined number, 49%, is that substantially different or roughly the same? I don't have your historical reports in front of me. And similarly for the top 2 tiers of the triangle. Are there changes relative to what we've always seen in the past?
It's a great question. I don't have the information on that. This is the first time that we've actually dug into extensions and broke it out between combined filers and corporations. So we haven't done this in prior years. However, we can, but when I do that, I would probably look at returns and extensions, because right now extensions, again, are so far ahead of returns. You really can't compare it. Well, you can't compare it to 20 because of the due date change, but you'd have to compare it to 19, and the extensions didn't look like they did versus count. So I think we could drill into that a little bit more. Right now, I don't have a comparison factor on that.
Well, I'd encourage the drilling, and I understand the caveats and the caution too. Yeah, thank you.
As a follow-up to his question, can you give us an appreciation of, compared against 19, the number of additional extensions and the magnitude compared to 19?
Sure, I actually have that. Let me just flip through my sheet here right in here.
And then provide that in your email too.
So extensions compared to 2019 dollar wise were up 51%. In count wise, I believe they are up almost 20%.
Okay, and then the follow-up question to that, is that abnormal compared to going back 5 years prior to 19 from year to year?
I don't have data on that, but my gut instinct is yes. I know looking back just generally based on our counts document, we've never seen extensions this high, the count of them, nor the dollar amount in them.
Thank you. Representative Almy, do you have your second question?
Thank you. Yes, I'm trying to look at all of these individual stimulus payments that people got. The lower income people would have just been replacing debts that they normally paid on time, paying their rent, paying for their electric bills and gasoline and all that kind of thing. But beyond that, a lot of people apparently were putting money into savings. And then they were buying a lot of stuff. And apparently most of the stuff was from outside the state and came through Amazon. So it would have been all sorts of companies. And some of it was our local grocery stores and stuff, but they probably weren't buying much more than they would have if there hadn't been COVID. So I don't know what else they would have been spending money on, but have you got any thoughts about whether any of this activity would have actually materially changed our revenue sources? Well, there's liquor. That's about the only one I can think of because the tobacco is basically from Massachusetts. Is there any of that we actually end up taxing indirectly?
So I think that's really the conundrum that I was trying to talk about earlier is, the COVID pandemic in isolation would have substantially reduced revenues. And so therefore, the stimulus in some respects simply brought us up to where we would have been had the pandemic not happened. I think the question that Representative Major is trying to identify is, did it lift us up higher than where we would have been? And I don't know how we, in a data-driven way, really give you that answer. Just because of the amount of detail that we get doesn't really say, is this a dollar that would have been spent had COVID not happened?
But the extensive buying of stuff that I understand happened, and most of it remotely, I don't think we've got anything in our tax system that would pick that up at this point.
I think I can tell you anecdotally without disclosing taxpayer information that, big box stores performed really well. Retail generally, what we know anecdotally to be retail type taxpayers, performed well last year. To me, that is evidence that some of that spending was more than just replacing what they lost due to COVID.
You all set, Representative Almy?
On as much as I can be.
Okay, Representative Bromley, followed by Representative Spilsbury.
This wasn't going to be, thank you, Mr. Chair. This wasn't going to be my comment, but I will comment. If you were trying to build a pool last summer, an in-ground pool, you had like a 2-year waiting list in New Hampshire. People are spending money that they normally would spend on going on vacation and stuff like that, as we heard all sorts of stories about those kind of things. But for Carolyn and Melissa, you may want to just share some stories from the other states so that the committee can appreciate that we don't stand alone in terms of kind of wandering in the dark here a little bit, trying to estimate future revenues. You want to share some of those stories from other states or one, whatever?
Yeah, sure. I want to pause 1 second though, because I realized I pulled the wrong document. This is what happens when you're doing it on the fly. For extensions, if I can just update my numbers, I gave you mid-month numbers, not end of the month. Dollars were up 63% compared to 19, and counts were up 48% compared to 19. I knew that number seemed low when I said it.
Repeat.
And before we finish this session, I'd like to get from the DRA, you don't need to answer now, with all the information that you have at this point in time, your revenue estimates for FY22 and 23, have you come up with new revenue estimates? And then if they're not specific, is it a new range? So I'll go to Representative Spilsbury.
Go ahead, Mike. Mr. Chair.
Oh.
I haven't had a chance to react to my question.
Oh.
Comment.
Yes, thank you, Representative Abrami. Sorry, I sidetracked there for a moment. So compared to other states, I'm waiting for another report we get that sort of comes in to say how other states are doing. We just got it for March, but I don't think March is the whole picture. As we know, April just came in really strong. In the March report that does compare other states' revenues, showed some states have some pretty good winners in the corporate tax department and some have losers. However, anecdotally speaking about April, which was sort of a big change compared to March. We had some growth, but not what we had compared to April. I do know there are states that are doing really well. For instance, we've been chatting with California a bit for our SB3 because they have a similar bill out there that we just like to get some input back and forth to make sure we're sort of on the right track. And we were just chatting with somebody similar in the same similar position. And they have a much larger revenue source for their corporate income tax compared to ours. They're normally maybe a few $100 million ahead of plan. And currently right now they're $1 billion plus ahead of their plan. And they're sort of in the same situation that revenue is definitely flowing in. So we are hearing that from other states. Again, when we get the report for April, it will be more definitive numbers and answers versus anecdotally. But there are other states that are faring well. There are other states that are not doing as well. I think New York isn't doing as well. But we're not alone in this.
Thank you.
Since you mentioned California, didn't California come up with an estimate of what it would cost them if they forgave the PPP loans? Was it around $6.2 billion?
Mm-hmm. Yeah.
Right.
That's huge.
It's a big state.
It's a big state. And we really need to compare what their total revenues, business tax revenues would be compared to ours.
Can we get an idea for a big state that conformed with the feds on the PPP, whether on how much increase they've seen in revenues?
Are you asking a state that conformed sort of automatically, so it should have been baked in?
Yes.
We can take a look at that and see if we can find anything useful.
Any more information on other states? If not, then we can go to Representative Spilsbury, followed by Rep. Southworth.
Thank you, Mr. Chairman. Just before I ask my question, another point on California is that yesterday there were headlines indicating their state revenue surplus is great enough that they're thinking of sending payments out to their taxpayers similar to the ones that have been sent out in 3 stages by the feds. I guess I'm going to try and formulate this as a question. That lacking data, we have to make a lot of assumptions. We look around for anecdotal stories. And it seems to me that what we see in net on 2020 is a great skewing of outcomes. And unfortunately, a lot of times governmental actions have the tendency of pushing separations even further than they were before. So the poor get poorer and the rich get richer. And so, you know, following up on a couple of comments that Representative Almy made, it seems like there were an awful lot of low-income, high-touch service workers who were very badly hurt. And maybe many of the businesses that employ that kind of worker, like in the hospitality and tourism and restaurants, were the ones that were most harmed. And then there were many other sectors that did better than normal. I was going to use the pool analogy also, Representative Rami, but you name it, when it comes to backyard entertainment, I've never seen so much chatter on our community forum about where can I get trampolines and grills and all kinds of other stuff to use at home. Trying to get tradesmen to do anything was difficult. Home Depot was doing an incredible business with home improvement stuff, renovations. And so we've already had comments about big box stores and internet purchases and businesses that switched production to support PPP, an enormous number of employees who were offered bonuses to stay on or hardship pay, including teachers. I just wonder whether net, when the stories and the data's all in 2-3 years, when we look back, we might actually find that there was on net increased economic activity in 2020. And we see it in our own tax revenues. On the one side, we've seen the meals and rooms tax down, but we see the tobacco, the liquor, the real estate transfer tax all up. So this skewing is occurring in so many ways we can't keep track of it, but it doesn't necessarily mean that total net income was down, total net economic activity was down. From a state perspective, our revenues ride on total net activity. So would you agree? That's the question.
I think the answer has to be yes, because the numbers are the numbers.
Hard to gauge.
It's a nice review, Representative Spilsbury. Representative Southworth.
Thank you, Mr. Chairman. An anecdote, and then I want to follow up on Representative Spilsbury. I did decide to buy a new oven this winter because I was doing more cooking, and my local appliance store, Generations running it, at a great small business, said this has been their best year ever. And they were way backed up with all kinds of appliances. And I think that's just one more example. And my follow-up goes along with Representative Spilsbury. There were many people who got up to $3,000 in stimulus funds who did not have any financial need. And I really think that those extra checks coming in to really middle income people throughout New Hampshire, I think then they thought about what is something I've always wanted to get. But again, following up on the representative, I do think a lot of that money, maybe some into savings, but I think a lot of it did flow into the New Hampshire economy.
That's a fair statement.
Is it Carolyn or Melissa?
Yeah, I think that's a fair statement. I think I can give you another example. I mean, think about student loan, the suspension of payments on federal student loans. That's sort of a below the radar item, but think about the impact of potentially not having to make your student loan payments over a year now, and what potentially folks did with that dollar, because the decision was agnostic to whether or not the borrower needed to have their payment suspended. It was just suspended. Even things as simple as that and as discreet as that could certainly have had an impact on consumer spending, saving, all of those things that directly feed the economy.
Yeah, and I think just to add to that, economically, what we've heard from economists are that although spending was great, it was still stalled some, and this is what it looked like. And there is a pretty good pent-up demand for spending that they anticipate seeing in this next coming year. And I think couple that with Representative Southworth, you spoke about the spending and then maybe some in savings. I think what we've also heard is that savings, personal savings accounts are at an all-time high as well. So it's almost a split of there was increased spending, but maybe not even at the peak of what it could have been, coupled with people were putting funds away. So it's not a total loss at the end of this year.
Okay, I've got a question to ask the DRA. Is that with the release of the American Recovery Act funds, and then they've just recently released the rules, even though we don't have them in place yet, or we will be getting somebody to come in and help us understand what the rules are going to be. What do you anticipate these American Recovery Act funds are going to do to our revenues this coming year? Have you done any work on this yet?
We haven't done any actual estimates. I think it would, because so much of the money is going to flow to the state and it's going to be a state level decision on how to use it. I think it will depend a bit on what New Hampshire and all the other states decide to do with that money. But I think it's safe to say that to the extent the programs mirror what was distributed in the first rounds of stimulus through the CARES Act, I think we would anticipate seeing a similar impact as we saw in fiscal 21 from those funds.
Because it sure is going to affect our overall revenue picture, but nobody understands how it's going to be. So we need to get revenues out and agree on revenues with the Senate by the time we do our committee conference. And I don't think we'll have the answers complete at that point in time. Have you adjusted your revenue estimates for FY 22-23 at this point in time, or are you waiting for more information on the American Recovery Act, or what?
Go ahead, Melissa.
We have, since we presented to you last, we dug into April and revised our fiscal year 21 numbers. As for our 22 and 23, we have not made any additional adjustments from when we presented to you. I believe it was a couple weeks ago.
All right. Representative Alamy.
Thank you. Is the DRA also responsible for trying to understand the ARPA guidance, the American Rescue Plan guidance that just got issued from the Treasury, and specifically on how it affects whether or not if we keep all those tax cuts in the budget, or we pass a bill that we just voted to pass yesterday that's much smaller, the SB 101, on how, on whether they would trigger removing money in which years.
Good question.
Yeah. So I printed it yesterday and killed a lot of trees and read it. So I did attempt to understand it, but I don't think that the department will be the agency that will officially weigh in on that question. I really think that that will be the Department of Justice or Gopher, probably Gopher with, you know, the advice of the Department of Justice, since Gopher is the agency that will ultimately be responsible for spending the vast majority of those ARPA funds. Or at least that's my understanding. I don't have any inside knowledge on that.
If I could, we never got hardly any information out of Gopher, and we never saw them. And this is really important to our committee. I wonder, are we going, I distributed to everybody after Representative Ames told us that there was a larger document than the one I'd found. Last night, I distributed to everybody the pages that deal with net tax revenue reductions, which is only about 20 pages, 15, I think. So, but it is extremely dense. So I haven't started to read it yet because I was too tired last night. And I think especially the timing issues of when the money comes in, when its growth is calculated from, all that, I hope it's in there, but we need to understand it.
And I'm sure there's going to be additional publications on interpreting how to spend these funds and how you can get in trouble and not get in trouble. And that will come with time.
But we only have till early June.
Representative Ames.
Thank you. Yeah, I just want to second the thought advanced by Representative Almy, that it's important that we understand the process for identifying the information that's responsive to the Treasury's guidance in a way that we all feel comfortable with, because it's going to be absolutely critical. And it starts with the sort of baseline year that the guidance points towards, which they call fiscal year 2019. Representative Almy yesterday wondered what fiscal year means in that context. Is it the same as ours or not? I kind of think it's not the same. I think it's the federal fiscal year, which is, which way do you go? October to September or September to October, whichever. If that's the case, there's going to have to be some jiggering with our numbers to square them with that baseline. And then there's a lot of figuring that goes in as time passes. And I'd certainly like to see a process that goes beyond the process that the governor set up with the gopher system. And I hope that, let's say, the legislative powers that be are focused on this while there's still time to address this.
Next week, Tuesday, we'll be dealing with a work session on Senate Bill 22 and Senate Bill 3. And, we'll also be having executive sessions. On Wednesday, I hope to have somebody come in that understands what the rules are relative to the American Recovery Act, how it can be spent and what not to spend it on so it doesn't jeopardize these funds. That's what we're planning for next week. Any further questions for today? Representative Southwood.
Thank you, Mr. Chairman. The question's for you. Let's say we do pass a budget in June, and if that happens, there are major changes that we discover in the summer or fall, whether it's the rules, different funds, and so on. What is the process from there on? Is there something typical, a way they handle something that's pretty unique like that?
That's the same question I have, and that would have to be worked out with the Senate President and the Speaker to see what the strategy would be.
Yeah.
And the strategy could very well be is to come in and have another session.
Yes. Okay. Thank you.
A new budget.
Yeah. This is a unique year, so it just seems like, creativity is needed.
And I'm sure you're going to see that. Representative Almy, followed by Representative Bromley.
I think Representative Bromley was.
Representative Bromley.
Thank you, Mr. Chair. So I just want to, are we going to cover the preliminary thoughts of the DRA today as it goes to how if we do pass SB3, the spread of the impact over the next bunch of fiscal years? That all will not hit in one fiscal year, the 99.4 million.
Right. Matter of fact, we have discussed that, you and I have, with the DRA. So maybe the DRA might want to explain how the SB3 would fall out over the fiscal years, how much of it would show up in FY 21 and then 22, 23, and 24.
Yeah, so when we chatted, on Monday, Representative Abrami, what we had done is taken a look at really California's methodology in their, fiscal note equivalent for their Senate Bill 3 bill. And they had determined that, the bulk of the impact was in fiscal 22, maybe as much as 50%, about a quarter of the impact in 23, and then the rest in out years. But California is different than New Hampshire in a couple of important ways, including the fact that they tax partnerships and LLCs very different than New Hampshire does at the individual level instead of at the entity level, as well as some of the certain parameters that they put on their own decision to conform to the federal PPP treatment. So I think what I would like to do is, and what we began doing yesterday, was sort of coming up with a New Hampshire specific methodology to make sure that we wouldn't differ significantly from what California predicted. And we can talk to you about that next week if that is helpful. But I think it's fair to say that the bulk of the impact we would expect to be in fiscal 22, followed by 23, and then trailing impacts in later years.
That would be helpful. By next week, we should know what we will be doing on Senate Bill 3. At this point, we have not made a decision on Senate Bill 3. Representative Almy.
Thank you. I just wanted to ask, is the only thing we're going to exec next week on SB 22, was it? Yeah. Or are we going to possibly exec SB 3?
At this point, it'll be SB 22. SB 3 is still up in the air.
Because, well, both Representative Murphy and I have been talking with our very capable chamber executive for our region. And I think that it really would be good to get some kind of input from the chambers on the issues that a number of people in the committee have brought up about which of these businesses actually are barely surviving on this at this point that got PPP loans, and which ones are thriving, as some people have put it.
Well, we could look at that next week too. We could bring in a chamber member and hopefully BIA can identify some of the businesses that are just barely surviving and some that didn't survive.
And the BIA generally deals with big businesses. It's the chambers that deal with the smaller ones.
Well, let's get together and work that out. Anything else for today? We have our work ahead of us. I think we will be in a better position to know what we'll be doing with SB3 from next week. All right, thank you. And Pat, would you give me a call?